The first week of every month in the United States macroeconomic calendar traditionally ends with a NonFarm Payrolls report. Starting Tuesday, other U.S. labor market data will also be released, which could steer market volatility. Additionally, on Wednesday, Fed Reserve Chair Jerome Powell will provide a speech. Given his recent silence, his remarks could influence the markets, sparking new fears or hopes among traders. Macroeconomic data can also have a strong effect. Let us analyze how the report scheduled for December 3 and 4 could shape the market sentiment. On a Tuesday, the publication of the U.S. job openings data for October will be the main highlight. Despite uncertainty around October's NonFarm payrolls, which added 12,000, this report will be closely analyzed. An expected drop of 63,000 job openings will hardly be considered as a large, but it could still weaken the US dollar. As usual, Wednesday will feature US CRUDE inventory reports from the API and EIA. Last week, both agencies reported significant inventory declines of 6 million and 2 million barrels, respectively. This week, the EIA predicts an increase of about 700,000 barrels, which could cause oil prices to dip slightly. Early Wednesday, Australia will disclose its GDP for the third quarter. While modest growth of 0.1% is expected, it still signals positive momentum, which is likely to boost the Australian dollar. Japan's composite PMI, covering both services and manufacturing sectors, is expected to rise to 49.8 points. A strong economic activity index could support the yen. In China, the composite PMI data will hardly be so positive. Thus, the Chinese composite PMI may decline by 0.5 points to 51.4, signaling a slowdown in economic activity, and this could pressure the yuan and cause a decline in WTI and the Brent price. S&P Global analysts provided a positive forecast for Russia, predicting that the composite PMI will rise from 50.9 points to 51.4. Although the Russian ruble may not exhibit a strong reaction to the report, a robust economy generally supports the national currency. Therefore, the ruble might also strengthen based on this data. Germany, the leading economy in the Eurozone, is facing negative prospects. According to S&P Global forecast, business activity continues to contract, remaining below the critical 50-point threshold. In November, the region may drop deeper to 47.3 points, which could push the euro down. The Eurozone's composite PMI is also expected to decline by nearly 2 points below the critical 50-point level to 48.1, and this would likely weaken the euro significantly against the US dollar on Wednesday. The ADP report for the U.S. private sector employment may add fuel to the situation. The indicator is projected to increase to 240,000 jobs. While it does not closely correlate with the main labor market data due on Friday, December 6, this growth is still positive for the US dollar. Additional support for the US dollar is expected from the composite PMI, which is forecast to climb to 55.3 points. This indicates that the US economy continues to thrive even under high Fed Reserve rates, reinforcing confidence in the dollar. Please note that the time of publications is set in a GMT +3. The next video review of a trader's calendar will be released on Wednesday, December 4. We wish you profitable trading and see you soon!